In speaking with some of the world's top business leaders, I asked what it is that would make business, jobs, even better in the U.S. Quotation marks. Stop quarterly reporting.
Wow.
And go to a 6-month system. That would allow greater flexibility. This is him now. Yeah. That would allow greater flexibility and save money. I have asked the SEC to study.
Wow.
That would mean, you know what that would mean?
Business Roundtable is so far behind. Is
twice a year we'd only have to do that, you know, that. This guy, more and more stuff, Sorkin, he's going to end up, you're going to end up loving this guy. I'm telling you.
So I very much support this idea. Well, no.
Business Roundtable is pushing this.
First of all, but Business Roundtable has been pushing no guidance or pushing it way back, pushing
but the overall strategy of long-term thinking rather than short-termism.
Right. I don't know about the 6-month idea. I'm very curious who he must have talked to in the past.
And the business leaders, yeah.
About this particular topic.
That's very interesting.
That's a fascinating.
Elon Musk.
Fascinating tweet.
I mean, I think about that Friday when we get J.P. Morgan, Citigroup, and Wells Fargo. If that was only twice, I mean, my life would be.
Thinking about it in a different way, but what do you?
My life would be so much better.
Let me ask you a very different question. Do you think that 6 months on a report?
Oh, you're going to get real serious about it. I'm talking about how it affects me, Joe.
I understand that, but is 6 months the right?
No, I don't know. That is a good question. I don't,
if you will.
No,
they're really about the reporting.
There's people
about the guidance issue.
There's people on both sides.
Well, you remember? I mean, a long time ago, back in the '80s, the late '80s, when I know everybody goes back that far, when the Japanese economy was beating everybody in the world. One of the things that was always said was the Japanese firms could plan for the long term. Right. They weren't focused.
How'd that work out?
Not very well.
As far as Japan goes. It's been 20 years. They don't even own Pebble Beach anymore.
Absolutely true, but it was always one of the focuses.
Walmart. I mean, that was.
No, I know. I'm just talking about it. I don't. We don't want to emulate.
It's a question of the efficient market theory.
There was a time when we thought,
is the market efficient, and does the market have provide a corrective and a balance to executives?
More transparent. I mean, there's an offset between transparency for investors and for long-term objectives for CEOs.
And by the way, I think it's different on a company-by-company basis, because I can throw up companies on either side of this argument that would say you need to have it every 3 months or you need to have it every 6 months.
And it really depends on where they are in their own cycle.
Right.
Where the economy. Look, this goes to the whole Elon Musk story, as you said. He thinks right now he needs to be he would prefer to be a private company. He doesn't want to have to deal with these.
You know, I think it would actually benefit long-term planning. I don't see how it could not have a positive effect if you take that immediate focus, because in order to produce short-term profits, you have to 100%. Do slightly different things with your products, with your product line, with all of your usage of cash.
If there's anything that's going wrong, the wheels are falling off the bus, there's a bad management team, like that covers up any of those problems and doesn't expose them for a much longer time.
And there's always a tendency to look towards that. What can we do to improve the next report?
Yeah.
6 months, not bad. I have to say, my initial gut reaction is I like the idea a lot.
Wow.
How do you feel about that, Joe?
I just think that's a monument. This is a red letter day. It's something Trump said you have not immediately thrown up.
Mark it down.
Yeah, that's awesome.
What is it? Stephen Schork, you have a view on this?
On the report, absolutely. We're looking at someone that, to the point that you don't make long-term investments. You're always worried about making the short-term gain. And we saw this in the industry a couple of years ago when Wall Street activist investors stood in looking at the quarterly reports and forced companies, refiners, Hess to be one of them, to get out of one of their businesses, the refining industry, because that was thought to be a dinosaur of an industry. And shortly thereafter, that industry completely turned around and you wanted to be a refiner. And I think a lot of that was prompted by the fact that you had investors looking at the short-term gains. They were looking at an anomaly in the market where Hess couldn't get its oil to its refineries on the East Coast, so they were forced to get out of that business. And therefore now, given the margins that refiners were making, that is certainly a business that should have been heavily invested in at the time when they were being forced to get out.
Right. One of the points that the president makes in his tweet is the cost savings that would be involved.
Yeah.
How many less people, if you were running a publicly traded company, how many less people would you need in the main office, if you will, to go, putting all these records together if you only had to do it twice a year as opposed to 4 times?
That's bad on the jobs front.
It's bad on the jobs front, I agree. And by the way, highly paid jobs historically.
In the old days when news cycles could be quiet, we used to look forward. We always had something to do every 3 months for an entire month as a business network. We'd be inundated for a month where we'd be so busy. We have the news cycle seems a little more active now. I'm not sure we need to, just have that annuity, So once again, and how well.
Although it still goes back to this idea. I understand the argument for long-termism versus short-termism, but again, you need to know when the situation changes and how big macro events are also impacting bottom lines. I mean, if you didn't have any idea that some of these broader issues were actually showing up in the bottom lines for companies, whether it be good news or bad news.
Can we get our buddy on, Mark Weinberger? He runs one of these accounting companies. He's like, no, this is horrible. What a terrible idea. I want to do it every month. I mean, for accounting firms, they'd have less business, wouldn't they?
Maybe, or maybe they'd need some additional help on trying to figure out what to do long-term planning.
I don't think the president consulted Mark on this.
I want to know who these business leaders are. Yeah. I mean, a lot of business leaders have been making this point in this comment. Remember, by the way, the president just had that dinner.
Yeah, I know.
Ingenuity was there. Prince of the Frack was there.
Yeah, it may have been a topic of conversation there.
I wonder whether that's where some of this germinated.
Yeah. Did we ask Schork whether oil's going to 100 or 50? We didn't really.
We haven't got. Hey, Schork, you got 10 seconds to tell us where oil's headed.
Well, if we're going to go to 50, the time is now because demand is about to peak. We're going into the fall. Refineries are going into their turnaround season, and we're going to be driving less miles in our cars. So we're at that seasonal DY over DX moment where demand is falling. So if you're going to see continued weakness in oil, the time is now.